Welcome back to Alpha Recap. I'm glad you could join us. We're wrapping up a wild post-close day, and as always, if you have questions, you can reach us at stockalpha.ai. Today, we're digging into a big M&A clearance and a tape that was all microcaps and leveraged product fireworks.
Thanks for having me. Lots to unpack. Big regulatory news, plus a messy microcap and levered product session. Yeah, buckle up.
Let's start with the biggest headline. The Justice Department cleared Paramount's reported deal for Warner Brothers Discovery. That removed a major federal hurdle for what's been reported as a transaction roughly $110 billion in total value.
Right. To be specific, the DOJ signed off on the cash piece, about $81 billion, which is what really mattered from a federal antitrust angle. That's the sort of move that can re-rate the whole media and entertainment group.
But state-level litigation still hangs over this, correct? So even though the federal uncertainty eased, there's still headline risk.
Exactly. When you step back and look at this, the DOJ approval reduced a big cloud, but state attorneys general could still sue. That keeps the timing unclear. And for traders, that uncertainty translates directly into volatility in media names and in merger arbitrage strategies.
So watch court filings, state AG calendars, and anything the companies say over the next few sessions.
Yeah, that tracks. Those are immediate catalysts.
Okay, shifting gears. The tape was dominated by microcap extremes and leveraged ETF stress. Let's talk leveraged products first, because one of those moves was eye-popping.
Totally. Direction Semiconductor Bear 3 times ETF plunged by roughly 25% on enormous volume, about 883 million shares. That's the kind of move that creates forced flows, margin calls, and big rebalancing trades.
So, what really stands out here is how those forced flows can spill into single-name stocks and options markets, right?
Exactly. Leverage products rebalance daily. When one of them moves that much on that much volume, it often signals short covering or forced deleveraging. For anyone running active strategies, the slippage and whipsaw can show up fast.
And it wasn't just that fund. There were small-cap inverse products that also printed notable moves, so the theme was broad.
Right, and the other thing is volatility begets volatility. When a levered product moves hard, it can trigger programmatic hedges, wider spreads, and liquidity dry-ups in related names.
Let's dive into the microcap story. The tape was littered with one-day rockets and cliff drops. Some names up north of 100%. Others down to pennies or zeroed quotes.
Honestly, I was a bit surprised by the breadth. We saw multiple names jump more than 100% and a lot of straight collapses. For example, one small cap plunged about 86% to 40 cents on roughly 52 million shares. That kind of single-session shock needs a filings check on Monday.
And on the upside, there were some massive percentage gains too. One tiny name soared about 437% to $1.88 on nearly 3 million shares.
Exactly. The pattern we saw was clear. When volume confirmed the move, tens or hundreds of millions of shares, the move had more conviction. But a lot of the insane percentages were on de minimis volume, hundreds or even single-digit trades. And those are the classic liquidity spikes that can reverse in a heartbeat.
Short reaction.
Right.
Quick aside on data and market structure. Several quotes printed at zero or showed contradictory fields, which can be either corporate actions like reverse splits or just data feed glitches.
That's a big risk. One or two names showed zero quotes, and another printed ultra-high volume that just looks off. Models that automatically act on percentage moves without a sanity check will get burned here.
So what should quant teams and risk desks do tomorrow when markets reopen?
First, treat extreme percentage moves as flags, not automatic trade signals. Human verification on filings, exchange notices, and SEC disclosures is critical. Second, recheck margin exposure to levered ETFs and thinly traded names. Those can create forced liquidations fast. And third, adjust screens to account for volume filters so tiny trades don't trigger big bets.
Short reaction.
Totally.
Let's do a quick rapid-fire recap of the notable prints, without naming tickers. Just the market facts you need to follow up on Monday.
Okay, one small cap, down about 86% to 40 cents on roughly 52 million shares. Check filings. Another group printed zero quotes on mid-range volume, potential delisting or administrative action. On the upside, one name jumped about 197% to $1.53 on about 149 million shares. And another was up about 140% on 200 million shares. And remember the semiconductor bear ETF fall we mentioned? Down about 25% to about $5 on roughly 883 million shares?
Wild day. Big cap names also had moves. Super Microcomputer rallied about 9% on heavy volume, and American Airlines edged up about 2% with elevated activity.
Those big cap volume leaders matter because they can pull sector flows. A strong print in a growth-oriented hardware name can redirect attention and money towards semiconductors and compute stocks.
All right, we're almost out of time. Let's wrap with clear takeaways. What should listeners remember from today?
3 things. 1. The DOJ approval materially reduced federal regulatory risk for that big media deal, but state litigation still creates headline risk. 2. The session's defining feature was microcap and levered product volatility. Volume matters, and tiny volume spikes are suspect. 3. Risk managers and quants need to treat extreme prints as events requiring human checks and reassess margin and execution risks heading into the next open.
Nice and clear. Quick final reminder. This is informational only. Analysts note patterns and potential catalysts, not a recommendation to buy, sell, or hold any security.
Right. Nothing here is personalized advice. It's all market color and things to watch.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening. We'll see you next session.